Welcome back, my friends. There have been ongoing developments in the cryptocurrency market. So I am updating you more often on this subject because it is a rapidly changing situation. As you probably know if you follow this channel, cryptocurrency exchange FTX filed for bankruptcy a little over a week ago. And the fallout from the FTX bankruptcy has sent shockwaves through the cryptocurrency world. Fears of crypto contagion are growing as another company's finances wobble. Cryptocurrency exchange company Genesis is now rumored to be considering bankruptcy. Wall Street investors are fearing contagion from FTX collapse. And there are a number of cryptocurrency companies on the daily watch list. Genesis, Coinbase, Binance. The crash in cryptocurrency prices shows no signs of slowing. So there could be a long line of dominoes waiting to fall. But where will it stop? What is the real value of Bitcoin, Ethereum, and other cryptocurrencies? What does this mean for the US economy? And what does this mean for the future of the United States? But before we get into all of that, please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. As you might imagine, there are fears that the collapse of FTX will lead to more destruction in the cryptocurrency world, and create a contagion that might hit almost every crypto investor in the United States. That includes everyone from individual investors to major Wall Street institutions. Speculation is swirling that cryptocurrency trading platform called Genesis will be the next domino to fall. So far, that has not happened. But how far off can it be? But Genesis has reportedly warned potential investors that it may need to file for bankruptcy. Our goal is to resolve the current situation in the lending business without the need for any bankruptcy filing, said a spokesman for Genesis. Genesis is experiencing liquidity problems as investors pull funds from their cryptocurrency accounts. If it does not manage to quickly raise a significant chunk of cash $1 billion, it could have to file for bankruptcy. And there are more ominous signs. Gemini has suspended redemptions of customer funds from their accounts. It has also stopped originating new loans. Crypto contagion is a real possibility in the decentralized blockchain system. And since digital currencies are unregulated, there are virtually no investor protections. Cryptocurrency companies are not bound by standard accounting procedures and controls. That means that these companies can be tangled up with one another in unclear and unprecedented ways. For example, FTX had deep ties with about 100 other crypto companies around the world. And, as we are hearing from the FTX bankruptcy, it had more than 1 million customers. That paved the way for its financial troubles to spread quickly. Prior to its collapse, FTX bailed BlockFi, another cryptocurrency company. Now, BlockFi has stopped client withdrawals because of significant exposure to FTX and associated corporate entities. It is also not permitting its customers not to make any deposits. There are a number of scenarios it can pursue, said a spokesperson when asked whether the company was on the verge of bankruptcy. We are working to determine the best path forward for our clients, the spokesperson continued. But the collapse of FTX stretches well beyond companies and investors with direct exposure to FTX. The spectacular implosion of FTX has stoked volatility in cryptocurrency ecosphere. And it has led to collapsing values of cryptocurrencies and Bitcoin. Remember, FTX was valued at more than $30 billion earlier this year. Actually, cryptocurrency values have been falling steadily this year. And now, they are falling even more. Not to mention that is causing a major wave of panic. Gemini Trust partnered with Genesis. And Gemini account holders pulled more than $400 million out of their Gemini accounts. If you recall, Gemini was founded by the Winklevoss twins, Tyler and Cameron. And Gemini briefly suspended its yield-paying program that was backed by Genesis. So, the failure of Genesis could cause the collapse of Gemini Trust. Binance and Coinbase are two other cryptocurrency exchanges that are, for the moment, still operating. But both have experienced sizable drawdowns recently. Genesis works with large institutional investors instead of bringing everyday people into the crypto world. So, Genesis would probably have more influence on the financial system. We have no ongoing lending relationship with FTX or Alameda Research, said Genesis. Alameda Research, the cryptocurrency hedge fund founded by now former FTX CEO Sam Bankman-Fried. Caroline Ellison, the former girlfriend of Sam Bankman-Fried, was the 28-year-old CEO of Alameda Research. But Genesis reportedly does own some FTT, which is the native cryptocurrency created by FTX. The value of FTT has fallen from an all-time high of $79.53 to less than $1.50. And there is now speculation that Alameda Research purchased a lot of FTT at its height prior to its collapse in value. At one point, Genesis reported that it had $175 million in a locked FTX trading account. FTX has created unprecedented market turmoil, resulting in abnormal withdrawal requests which have exceeded our current liquidity, Genesis said recently. We are working on adding sources of new liquidity, said Genesis. But that it is a pretty scary statement in and of itself. Genesis has apparently reached out to both Binance and Apollo Global Management in search of new investment. But neither Binance nor Apollo Global Management responded to a request for comment. But this might still be just the tip of the crypto crash iceberg. As I am sure you know if you follow this channel, Coinbase is one of the few remaining cryptocurrency exchange companies. Although it is still operating, Coinbase has not had a good year. In fact, it has laid off hundreds of employees. And the FTX bankruptcy is casting a shadow of doubt over the entire cryptocurrency world. Coinbase is now caught up in the contagion. And so is the leading cryptocurrency, Bitcoin. Shares in Coinbase continue to fall as the Bitcoin slide continues. The value of Bitcoin also continues to fall. Investors are clearly worried about contagion from FTX's stunning collapse last week. FTX's bankruptcy came just 19 months after going public with a market capitalization of over $85 billion. For those of you not familiar, market capitalization is considered to be the total value of a company. Now, the market capitalization of Coinbase has dipped below the $10 billion level. The health of FTX's rival exchanges has now come into question. It has sparked industry-wide sell-offs and some companies have suspended trading. Some cryptocurrency companies are preparing their own bankruptcy filings. Prior to FTX's bankruptcy, the market was in the midst of a crypto winter. Bitcoin and Ethereum were falling in value and had forced a number of crypto companies into bankruptcy. In its Q3 earnings call, Coinbase reported a revenue plunge of more than 50% in Q3 as compared to Q3 of last year. Coinbase also reported a loss of $545 million in Q3 alone. Back in June, the cut 18% of its employees. Wall Street reacted with a violent sell-off. Last week, we heard of news that Multicoin Capital, one of the top crypto venture firms, issued a stark warning about cryptocurrencies. Multicoin warned investors in a letter that the collapse of FTX collapse will lead to additional failures. Because FTX has declared bankruptcy, holders of FTX stock have marked their holdings down to zero. And, actually, nobody really has a complete list of people or organizations that are holding FTX stock or FTT cryptocurrency. Some holders have revealed themselves or are already known. For example, NFL quarterback Tom Brady and his ex-wife Gisele Bündchen hold FTX stock. So, apparently, does former NBA star Shaquille O'Neal. And current NBA star Steph Curry. It looks like the sudden failure of FTX and its sister hedge fund Alameda Research are causing a domino effect of failures. But, as I am sure you know by now, not everyone believes in the future of cryptocurrency. Most notably, New York University professor Nouriel Roubini. Crypto and some of its major players as an ecosystem that is totally corrupt, said economist Nouriel Roubini. Recent turbulence in the crypto market has resulted from highly risky crypto investments. That also includes unsustainable borrowing and lending by crypto companies and related investment funds. Bitcoin is consistently trading below $17,000 for the first time since 2020. Many experts are fearing that the contagion could spread to topple other major players. For example, Crypto.com. The CEO of Crypto.com has denied this. For those of you not familiar, Roubini is nicknamed Dr. Doom because of his prior pessimistic forecasts. That includes an accurate prediction of the property market crash in 2007 and 2008. The cryptocurrency industry has ballooned in size over the past few years. Changpeng Zhao has led Binance to getting regulatory approval in both Dubai and Abu Dhabi. And, Binance has also won regulatory approval in France, its first major European jurisdiction. Just this past week, Binance gained further approval in Abu Dhabi to provide custody services to professional clients. But, Binance is banned in the United Kingdom and was forced to limit its activities in Singapore. Bitcoin sunk to just under $16,000 for the first time in recent memory. If you recall, Bitcoin peaked at an all-time high of $68,982.20 1 year ago. Warren Buffett, CEO of Berkshire Hathaway, has repeatedly said that cryptocurrencies are worthless and have no intrinsic value. Buffett says that cryptocurrencies have no value in the economy or to society. He clearly thinks that the current crypto winter is a prelude to the eventual death of cryptocurrencies. In January, few people would have predicted that this crash would happen. Regular people who never even traded stock were suddenly active in crypto trading. Cryptocurrency, by its very nature, is ungoverned and unsponsored by any country. There are no banks involved in the system and there are no regulations. But, what do you think? Please hit the like button and leave a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.